Industries and whether it's worth investing in, and he's asking for an entry level for the medium term. Gaurav, I'm going to come to you on this one. On the charts, at what level does this stock look attractive?
Well, if you see Lux Industries, after a good consolidation, we saw a very robust breakout with volumes, and it has been trading with positive bias since. But if you look at last few days, it's seen a small dip. Again, it has seen a rise. Now again, small dip. So if somebody wants to play for a trade, maybe say for a month or two, then I think even the current levels are good enough. One can keep a stop loss of 3150. And on the upside, one can keep trading, or one can at least expect 3,550, 3,600 kind of levels coming in. So the structure is good. On a hourly basis or maybe 4 hourly basis, it is forming higher high, higher low. That generally is the characteristic of an uptrend. Things are looking good. Volume participation is there. Good breakout was there. Since it is at the very high level, I would not be doing very aggressively. But yes, if somebody wants to buy for a couple of months, one can buy at CMP.
All right, our next viewer query is coming from Syed, and this was on New India Assurance. He's bought it at 165 rupees per share levels. He wants to know what should be his strategy post the results. He's asking, can the price go up to at least 190 rupees per share by this Friday once the view on weekly, monthly, as well as daily charts with target and stop loss? Gaurav, a very tough question coming in from Syed. Definitely, it will be difficult to plot about the intraday movement for New India Assurance. But how are the charts looking for this particular counter, and what should Syed do? Does it make sense to stay put in New India Assurance?
Always difficult if you have a particular set of time in your mind, because charts generally do not play the way you would want them to. And if you give them some time, then yes, it plays out beautifully. But if you want to have a very constricted view, that becomes quite difficult. Having said that, if you look at the daily charts, then the hurdle of 180, 182, that is the second time we have seen a fall coming in. So that is going to be a little difficult. I can at this stage suggest a stop loss of 160, because that was the level from where we saw a breakout. There was a retest of breakout, and then we saw an upside sort of coming in. It is going to take time. If the time frame to hold is till Friday, then I think that is not going to be the case. But one will have to hold at least for end of this month to make some decent gains. 160 is a strict stop loss. Below that, the stock can slip to 145, 140 levels. Keep a strict stop loss of 160. Till the time these levels are sustained, a reattempt of 180, 185 is what I would be expecting. And if that is sustained, if it closes above that, then one can expect levels of 210 to 15 also possible.
Okay, this next question is for you, Mr. Prabhakar. We've got Rajat who's asking about Panacea Biotec. And he's been trying to enter the stock from last week, and he's basically saying despite him being bullish on the stock since the last month or so, the stock is actually corrected. He's wanting to invest for the long term though. Should he use these opportunities to buy into the stock?
See, we don't track the stock very closely, but we need to understand these are vaccination play which it is played out. We need a structural story to enter, if it is a long term or even if it is a medium term. I don't feel there is anything which I have seen in the stock which is interesting for a long term or a medium term buy. Short term, yes, you can have an opportunity. But it is very difficult to give an entry or exit in this stock.
All right, the next query is from Srinivasan Rangaraju. He's saying he has 60 shares of LIC Housing Finance, which he's bought at an average price of 589 rupees per share. He's asking what sort of a target should he aim for LIC Housing Finance. He's a long-term investor. Mr. Prabhakar, what's your take coming in on LIC Housing Finance? Definitely, it's moved much lower from those average buying cost of Srinivas. He had bought it at an average price of 589 rupees per share. What should he do with LIC Housing Finance? Makes sense to stay put?
See, after PNB deal, there is a great deal of anxiety and movement in housing finance. But we need to understand even banks are getting into that segment because that is the safest way to lend money. So for me, if you want to play a housing finance story, then State Bank of India, where 20% of the book is housing finance, and it is the largest, having the largest book in housing finance. Even ICICI is concentrating there. Those two are also a proxy housing finance play, but LIC housing, due to their squeeze in the margins, no, you will not see a major upside from here. Maybe 10 to 15% in a year is what we can look at in LIC housing finance.
Fair enough. We've got Abhishek who's asking about Tata Coffee and he's looking for a target for 1 month. Coming to you on this one, Gaurav, how does it look on the charts?
If you look at the daily charts for Tata Coffee, yes, they are looking interesting. Again, we saw a big breakout sort of coming in, and now it is sort of forming a flag pattern, looking good. So I think if the breakout is a little bit higher at levels of 190, one can keep a stop loss of 175. Even buying at current levels would make sense. For 1 month, I would keep a target of 210 to 215. And that is looking quite interesting. So yes, there is a breakout. The volume participation is there. The pattern is there, so one can buy.
All right, the next viewer query is coming from Rushi saying that she has 150 shares of V-Guard which is bought at 272 rupees per share. Wants to know what's the outlook for this company over the shorter term. Gaurav, how is V-Guard looking on the charts? Our viewer has about 150 shares which is purchased at 272 rupees per share.
Well, it is forming an interesting pattern. If you look at daily chart, it has given a range breakouts from early start of 2021 till June or May, mid-May. It was trading in a range. Then we saw a breakout. It has happened with volumes. It is giving a retest, so one can keep a stop loss of 250 or on closing basis. Any intraday close also of 1 hour candle below 250 can be used as a stop loss. It can, if that is sustained, the immediate target would be around 285. And once it gives a close about 285, it can head towards level of 310, 315. So the setup is good. Volume participation was there. It's just there is a retest happening. It might take few more days to move back to the upward trajectory, but the structure is very good.
Now, often investing is all about patience. Mr. Prabhakar, this next question is from Sandeep Surana, and he's been holding Jamna Auto since 2017, and he bought 400 shares at that time at levels of 81. Now, the stock has absolutely plummeted since then, but it has also reclaimed ground and it is trading around his buy price. He's asking whether he should exit, use this opportunity and exit and shift to something else, or should he hold on expecting gains?
See, it is more to do with LCVs and HCVs sector. Now they make components for them. Now and that sector has not performed in the last 2 years due to COVID and other reasons. I think post this thing, there is likely to be a pickup in this auto ancillary stock. So if you have another 2 years by your side, I think you can hold on to the company, because the performance have been impacted from 2020-21 due to COVID. So I think it is a time that patience is something which will pay off in a long term.
Definitely, patience is something that will pay off in the long term. And our next investor is Sagar, and he wants a technical view on JSW Steel. He's bought 80,000 shares at 185 rupees per share. He wants to know if there is another leg of rally remaining in the metal sector. But Gaurav, if you look at JSW Steel, I can't remember when was it last at 185 rupees per share level. Definitely seen a sharp uptick from that particular level. So how is JSW Steel looking at the on the charts, and entirely how is the metal sector looking? Do you think there's some more steam left?
If you look at metal space, then on our daily you will not find too much, because you've seen one way rally. It's a vertical rally sort of. But if you look at the hourly setup, then yes, it is again finding supports. It's a continuation pattern, so it is very difficult to actually say till what level it can go. It's been trading, many of the metal names have been trading at lifetime highs. But yes, the supports of, I would, on daily charges, supports are placed at 675. Till the time those levels are sustained, a reattempt of 775, 800 is what I would be expecting in Tata Steel, JSW Steel. So if it sustains those levels, I would still be hopeful. Keep trailing your stop losses. If one wants to ride a major trend, then the ideal strategy would be to keep trailing stop losses and be long in the name.
Coming to you on a tire name, CEAT, and this is for you, Gaurav. We've got Jacob, who's bought 211 shares at a rate of 1,329, and he's looking for a short-term target. He's also asking whether it is the right approach to accumulate at these levels.
If I look at daily charts in CEAT, then yes, it is showing an interesting pattern. But I would just say currently it might not see a very swift upside because the structure is still lower high, lower low. I would rather say that buying Apollo tires or rather switching from CEAT to Apollo tire would make more sense in a similar space. That can give alpha very soon.
All right, the next query is coming in from Sherry, and this is about Tata Motors, saying that there is news of cases rising in Britain as well as UK. Will this have an impact on Tata Motors in the shorter term? I've not got the entire question of Sherry, but I'm guessing Sherry holds Tata Motors shares. But Mr. Prabhakar, I come to you on Tata Motors. Should one actually get worried about the short-term blips due to COVID-19? Do you think the fundamentals are strong enough for this particular company to be on in one's portfolio for the longer term?
See, UK business was very good last month, so yes, some worry will be there if you are a short-term person, but it should not worry you in the long term. The management is very clear that they will reduce their debt. Even China business has started to improve. Indian business in passenger car, Tata Motor is gaining market share. They are becoming number 3. I think they are doing a strong pitch in India. So I think for a long-term investor it is not a worry. But short-term, yes, even we are worried about the third wave in India. So the pickup is not there in passenger car. Two-wheeler is doing better off in India also. Our exports in two-wheeler is very good. But passenger car will take time to recover. Now, before our program started, how our rural India was impacted by COVID is something we heard from few experts. So I think we need to be cautious in short term, but medium to long term, I don't think there is any worry.
A fair point. In fact, that is really the question that all of us have been asking. What is the kind of impact on rural incomes this time around, and if there is a third wave, how bad can it get? So there is a case to be a little cautious. Coming back to you though, on Confidence Petroleum, Mr. Prabhakar, and this is a question coming in from Raj. He's asking whether he can buy for the medium term. First of all, do you have coverage, and on top of that, would you say that it is a buy?
No, we have never tracked this stock, so I won't be able to comment on Confidence Petroleum.
Okay, then if you were to be asked about the space, and if you were to talk about the entire crude derivative space, then what, according to you, would be the best pick?
See, BPCL has almost doubled from lower levels. So Hind Petro offers better opportunity. We are looking at OMCs. If we are looking at gas space, then Petronet, if it corrects another 8 to 10%, it becomes attractive buy. There is a cancellation of a deal, so I think another 8 to 10% correction is a very good entry point. IGL, MGL, they are already priced in fully. So any good correction in those stocks will be an opportunity to buy. Gujarat Gas has already run up, so the valuation is bit stretched there. But gas space for a long-term investor offers a very good entry point.
Alright, our next query is come from Mr. Balan saying that he has 300 shares of Trend that he's purchased at 650 rupees per share and 500 shares of Heritage Food at 425 rupees per share. He wants to know, does it make sense to stay put in these stocks or should he switch to some other stocks from Trend and Heritage Food? Gaurav, what's your call on both of these counters? Make sense to stay put in both of them, Trend and Heritage Foods?
Well, if somebody can hold on for at least couple of months, then yes, trend looks good. If you look at the daily or the weekly charts, it is forming a higher high, higher low, which again, like I said earlier, it implies that the trend is quite strong. It is in the uptrend. So exiting a stock in the uptrend would not make sense unless somebody wants to switch from something which can give early returns. But overall, I think the trend is very strong in trend. Coming to Heritage Food, yes, one can stay put for the reason that if you look at the weekly charts, there was a breakout above levels of 395, 400. It is sustaining so far. Tomorrow, there will be a confirmation of weekly breakout as well if it sustains above 400 or closes above 400. And we can see actually a very strong upside in Heritage Food. So, in my opinion, both of the stocks can be held on to.
I'm coming back to you, Gaurav, on this next question. We got Sangeeta, who bought Divi's lab at a very attractive price of 3583. The counter is the top performer as I see it on the Nifty, up over 3% at this juncture. Would you book profits at this point or would you wait for more gains in the short term?
I can book partial. I would recommend booking partial profits but riding the trend. See, if you look at Divi's in relative strength perspective, like Divi is divided by Nifty Pharma, the ratio is showing a very strong uptrend, which again indicates that it is expected to outperform pharma space. If you compare with Nifty 500, Divi is divided by Nifty 50 or Nifty 500. Even that is also looking very strong. So in all, it means that the stock can outperform going ahead. And this is one of the best pharma space, pharma pick to be traded or invested in. So in my opinion, one can keep holding, at least book partial quantity, but keep holding for targets. So it can even touch levels of 4,600 to 4,800 very shortly.
Alright, the next viewer query is from Santi and this is on IG Petro saying the current market price of this particular company is at 628 rupees per share. It actually saw a steep fall from the highs of January 2018, that's about 800 plus rupees per share. Wants to know what is actually affecting this sharp movement in this particular company, the stock price, what is drastically impacting this drastic fundamental changes, as she's mentioned, is impacting this particular stock. So wants to know whether it makes sense to go ahead and look to invest in IG Petro with a target of 800 rupees per share in a mind. Mr. Prabhakar, do you track IG Petro? Could you explain on how is this particular company placed fundamentally, and does it make sense to invest it with a target of 800 rupees per share in mind?
No, we don't track this stock, very difficult.
Alright, Gaurav, would you like to take this one? How are the charts for IG Petro actually looking like?
Well, the stock is in the uptrend, but buying at the current juncture would not make sense because again, if I look at the weekly charts, then it's showing early signs of rising channel, and I would generally prefer buying at a lower base of rising channel because that gives you a great degree of comfort. At this juncture, there can be I'm expecting a hurdle at levels of 645, 650. So if it gives a close above that, then yes, one can aim to buy on a weekly close. But till then, when it does not happen, I would be a little bit skeptical buying IG Petro at this rate.
Okay, I'm very quickly going to check with you, Mr. Prabhakar. Do you have coverage of Tanla platforms?
The Tanla also we don't have a coverage, and I have not tracked the stock.
Fair enough. I'm coming to you in the next one. We've got Tijo, who has bought Biocon shares, and he points out that it's not moved for a long time. But do you think that it warrants holding on he's talking about the short to medium term since he's already invested in the counter?
See, Biocon is the most expensive pharma stock, and they are in a unique category. So there, once the demerger happens, then I think value creation will be there. But it is a most expensive stock, and this segment has to catch up. So I think one has to wait patiently, and it has given a multi-bagger return if you see the last 10 years. So now after a 10-year rally, normally stock takes a pause, and there is a demerger story which people are waiting how it is going to pan out.
All right. Our next viewer query is from Ritesh. He's talking about Indiabulls Housing Finance. He's saying he's purchased June 300 call of Indiabulls Housing Finance. He wants to know whether he should continue to hold on to it or exit with existing profit of 10%. Gaurav, what's your take on June 300 call of Indiabulls Housing? What should Ritesh do?
I think it's a very interesting pick for the reason that it has a tendency of being in the band period. It gave a very strong breakout above levels of 245 to 46. It made a retest and now it has made a stretch swing high. I expect the stock price to head towards the level of 300. I think one can hold on to the stock, to the call option, 300 call option. And I feel that if the price today closes above 277, 278, then tomorrow we can expect a gap up as well. So in my opinion, one should hold on.
Coming to you, Mr. Prabhakar, on a question from Shivakumar, and this is on Colgate-Palmolive. This is one of those counters that I think a lot of people feel comfortable holding in their portfolio. He's asking, should you hold on to the stock for 5 years, and is it the right time to enter?
It is almost at an all-time high. I don't know, but if you are holding on to Colgate, it is one of the stock where every 5 years it gives 12 to 13% CAGR returns. So I think you can hold on to the stock, but a new investor should use only a correction to buy. About 1 month back or 1.5 months back, it was giving an opportunity, but now I don't think that opportunity is there.
Our next query is from Padma Balan, saying that she's bought 500 shares of IOL Chemicals at 580 rupees per share. Wants to know whether she should continue to hold on to IOL Chemicals or shift to UPL or any other fine chemical company, or should look at moving the sector as a whole only. Mr. Prabhakar, what's your take coming in on IOL Chemicals? Does it make sense to stay put in this particular counter, or should Padma look at UPL or any other company?
See, IOL Chemical, it was a major play for the COVID vaccines. So now it was a supplier for many of the medicines, API manufacturer. But now I think almost many companies have ramped up their production. So IOL Chemical, I would move out, and I will buy some pharma companies which have a long structural growth story. APLL is one. Dr. Reddy is something I am looking at. So Sputnik 5, they are going to be the major manufacturer in India. So I think Dr. Reddy or APLL will be a better bet at this point of time.
Okay, Pranav Dangi, that answers your question on IOL Chemicals as well, incidentally, and I know that a lot of the questions that have been answered so far are useful to everybody tuning in. Anyway, Sagar is asking whether I remember that he had said that the Nifty will go to 15,800 after 15,200 levels. So he's asking for a view on the Nifty. Gaurav, if you can take us through what you think are the key levels to watch in the near term, that would be very useful. After that, please tell us what your high risk and low risk ideas are.
Well, if you look at the Nifty index, again, daily charts, yes, there was a breakout. The previous swing high of 15,400 around, that is going to be a critical level to watch out for. Once it gives a close below that, we can expect more downside sort of coming in. That is on a daily chart. If you look at the hourly chart, then the levels of 15,580, 15,600, that are quite interesting, because that was the time when we saw a bounce back sort of coming in from those levels. So as long as those levels are sustained, I would be more gung-ho about that, and also the levels of 15,820, 840, that is the key hurdle. Once we give a close about this, then probably 16,000, 16,050 is what one should be expecting in couple of days once it close above 15,820. So on a very immediate basis, it is going to be 15,550, 580 on the spot side support. Any dip towards those levels can be utilized to create fresh long positions. The targets would be around 15,800, 820. Once that is sustained, next 200 points would be still.
Could you also take us through your high risk and low risk ideas, Gaurav?
Among the sugar space, like we were discussing about the sugar space, then one name I forgot to mention was Andhra Sugar. Many of the names that like I said, has already seen a swing high and they are going higher. But Andhra Sugar is one that has a very robust chart setup, retest of breakout, and now again going up. So that can give 10% from the current levels among the sugar space, where it's going to be my pick among the sugar. Apart from that, the first recommendation would be buy on Dixon. There was a triangle breakout that we saw in Dixon happening. It is making a retest of those levels, trading above the major moving averages. One will keep a stop loss of 3950. The immediate targets would be 4,600. Sale is another that is looking good. Metal names on hourly charts, like I said, it's forming a good base. So yes, there's a good support at levels of 121, which can be utilized as a stop loss on the upside. Targets of 135 is what one can expect in next couple of days.
All right, Mr. Prabhakar, what are your high risk and low risk ideas for the viewers?
SBI cards, and LTI are the two low risk stocks. SBI cards, it provides direct play on card and fintech space, and compared to other countries, our penetration in credit card and digital payment is still low, and it provides long growth for SBI cards. It is a number 2 in credit card and market share of almost 19% as regards to card in force, and 19.5% when it comes to the spend in credit card. And there has been some near-term stress on the book due to pandemic, but I don't think the long-term and the medium-term view gets impacted due to that. And it is a long-term compounding story. And when India becomes more of digital and credit card pay, I think SBI cards will be a major beneficiary because they have almost 23,000 branches to support them. And in LTI, it is one of the best run IT companies, and the revenue growth and margin is very consistent in them. And out of top 500 client, Fortune 500 clients, 71 of them are their clients. So they have secured large deals in net new TCV, almost US dollar 400 million. And the growth, we feel that 15% CAGR growth in revenue and 13.9% growth in EPS in the next 2 years is possible.
Okay. Thank you so much, Mr. Prabhakar, for sharing your views, and Gaurav as well. Thank you so much to the both of you for joining in, for helping us answer all of the viewer queries that came in, and also for the detailed conversation we had on the sugar sector. We're slipping into a short break, dear viewers. Do stay tuned. We'll be back with more on the other side.
Powered by LG Air Conditioners, all in one, one in all.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've